Hey guys, what's up? Welcome back to another live stream. I think we are already live. Please let me know if you guys can hear me and see me. And welcome back. What a gap and crap we had today, guys. MJJ, welcome. Hey boss, are we starting a downtrend or is this a retracement? We are going to talk about that for sure. Yeah. Today we had an, I'm not gonna say an epic gap and crap, but it was a it was a very fun, let's say, gap and crap. Welcome back, guys. So hello. Please drop a comment down below. Let me know what stocks you guys want me to go over. And I'm gonna do a little bit of housekeeping here, guys. I am not going to be active on Discord tomorrow. I am flying to New York City first thing in the morning. So I am not going to be able to, call balls and strikes throughout the trading session. So sorry about that, guys. I'm not going to be able to talk to you guys through the trading session. So I will see you guys on Monday. I will be back on Monday. SPY, TESI, S&P 500. Of course, yeah. Let's talk about what happened today. What happened today was super healthy, guys. I haven't been very active lately on Discord with the melt-up situations that we have been having in the markets. And today, take a look at the closing of the indices. Russell 2000 went down 1.60%. The Nasdaq went down 0.39%. The Dow went down 1.53%. And the S&P 500 went down 0.74%. And obviously, by the way, something that is worth pointing out here is the fact that the SPY today hit a brand new all-time highs. And the same goes for the S&P 500, guys. So this was a classic gap and crap. And now, obviously, the question would be, is this something to be worried about, or is this going to become a major decline in the markets? We're going to talk about that in just a second. Take a look at the performance of the sectors that trade inside the S&P 500. You guys should know, since you are very active in the markets, you should know that inside the S&P 500 we have 11 sectors trading. And take a look. All of the sectors went down today. All of them. And the day was nasty out there, guys. If it hadn't been for NVIDIA, guys, because you guys know that NVIDIA ended up going up today something like 5 or 6%, this day could have been a bloodbath. It was a nasty day out there. So the quote-unquote best performing sector today was technology. And technology went down 0.81%. Followed by materials, down 0.89%, and energy, down 0.91%. But other than these three sectors, the other sectors closed down today more than 1%. Nasty day out there today. NVIDIA was kind of, like making up the day that we were having today, but at the end of the day, we were like 2 hours, or we can say that 2 hours before the closing bell, NVIDIA started to give up, and that's what gave rise to the decline that we saw into the closing bell. So nasty day out there, guys. And if we take a look at the SPY, let me take a sip of coffee here, guys. Seems like people dumped their other stocks to buy in NVIDIA. Yeah, but NVIDIA ended up also going down into the closing bell. It was a nasty day across the board. So if you guys remember, you guys can over here, you guys can see a 4-hour chart of the SPY. On last Thursday's stream, we talked about this trend line. I think, guys, that this trend line is important. And I think that the markets know about this trend line, and we are going to be trading according to whatever the bulls and the bears do towards this trend line. So take a look. and for those who weren't here last week. So this is a trend line that comes from 2007, a long, long time ago. So I drew this trend line from the peak before the financial crisis. We are talking about October of 2007. Okay? Take a look at the trend line. Okay? It touches the 2022 high before the crash that we saw back in 2022 or 2022. Okay? And if I zoom in here, take a look. This trend line coincides with the all-time highs that the S&P 500 hit back in mid-March. And if I pull up here a 4-hour chart of the SPY, what do you guys notice? Take a look. So let me zoom in a bit more. The SPY and the S&P 500, for that matter as well, obviously, has been hanging around this trend line. So the markets know this trend line is important. And take a look at this, guys. So this trend line that as I just told you guys about, comes from 2007, acted as resistance on how many occasions recently? Let's count. 1, 2, 3, and 4 occasions. So finally, after 4 failed attempts at bursting above this trend line, the bulls were able to burst above it yesterday thanks to NVIDIA. We opened the trading session today, putting on a brand new all-time highs at $533.86-ish. And right after that, the SPY dropped like a rock. And take a look at the spot at which we closed the trading session today, below the trend line. So this trend line is uber important, as you guys can see over here. So if I zoom out, there's absolutely nothing wrong with the price action that we saw today. Take a look at this 4-hour chart of the SPY. We cannot make any bearish case based on major timeframes of the SPY. It is very obvious. This is an uptrend. Upward sloping 200-day moving average, upward sloping 100 DMA, upward sloping 20 DMA, and also an upward sloping 5-day moving average. However, we need to give the bears some credit in minor timeframes. And why do I say that? Well, because the bears prevented the bulls today from closing one trading session above the trend line that I think is important. And the bears were also able to break to the downside the 5-day moving average, this white line that you guys can see over here. So we can make a case here that the bears made, I would say, a little progress in minor timeframes. Is this going to turn into a major collapse of the markets? We cannot say that as of now. Okay? But any trend change begins from minor time frames and morphs into something larger. So far we cannot make over here any bearish case. Keep also in mind that we have a long weekend ahead of us because of the Memorial Day. Okay, so you guys need to keep in mind that the markets are going to be closed on Monday. Usually, I would use the 60-40 rule. On a Friday, before a long weekend, we usually have low volume, low participation, okay? Most traders, such as myself, are taking trips and stuff like that, taking advantage of a long weekend. And that implies that the markets usually go up rather than down on a Friday before a long weekend. So that implies that from, let's say, a statistical standpoint, the bulls have the ball tomorrow, okay? And does that imply that you guys are going to be buying zero day to expiration calls tomorrow at 9:31 a.m.? Of course not. But you guys have to know that usually, as I just said, before a long weekend, on the Friday before a long weekend, the markets tend to go higher. We'll see if that is the case tomorrow. So in minor timeframes, we need to give the bears some sort of credit. And in major timeframes, nothing meaningful has happened. This is an uptrend. and the SPY is innocent until proven guilty. Okay, so what are the levels that you guys should be keeping an eye on tomorrow, since I am not going to be active during the trading session? Okay, keep in mind the trend line. Say that we go up tomorrow. Say that the bulls try to carry out another melt-up operation. So we have two very well-defined potential areas of overhead resistance over here. The first one, the 5-day moving average. As of now, we can see the 5-day moving average signaling $530. That is going to be the first important spot resistance-wise for the bulls if you guys happen to see some sort of, turnaround Friday. Let's just put it that way. Say that the bulls burst above 530. What would be the next important level? The trend line. What about the trend line, guys? This trend line has turned into a very tough spot for the bulls. And you guys can notice what I am talking about here. So the trend line as of now comes in at $531.60-ish. So say we open the trading session, maybe the futures open super green later on today and stuff like that. And say that the bulls open the trading session tomorrow above 530. Keep an eye on 531.60, because that's a potential spot from which the SPY could be retracing, okay? To the downside, guys, and I was calling out this level of Discord before the trading session closed. I told you to keep an eye on 524.20, okay? I am going to zoom out here. In the case of 524.20, we're talking about a former all-time highs of the SPY back from, this was mid-March approximately. So if we happen to, say that we open tomorrow a bit green, not as high as 530, but say that we open between the 5-day moving average, so between 530 and between this previous area of resistance at around 524.25, 524.40. In case of a retracement, once the trading session opens, keep an eye on 524.20. This is a former all-time highs. So we have a former all-time highs, obviously a former level of resistance. Because of that, so this is a level that could be important for the markets in order to try to bounce a tape. So these are the levels that I would tell you guys to keep an eye on tomorrow. And obviously, it is a Friday before a long weekend, so we can make a case that the bulls have the ball into tomorrow's trading session. And on top of that, guys, keep an eye on NVIDIA. That's it. Keep an eye on NVIDIA. So now they are going to carry out a 1-for-10 stock split, and everyone and their mother wants to have 100 shares of NVIDIA. So NVIDIA is super important as some sort of gauge of what the markets are going to do. If you guys see NVIDIA holding above $1,000 and stuff like that, we can see selling pressure, but it is unlikely to see further downside if NVIDIA keeps trading above $1,000. Okay, the NVIDIA levels, Palo Alto Networks, sure. So welcome, Scott 7, Free Lee, Yolanda Adams, JP Guerra. Relax your mind. I'm going to do that in New York, most likely. I will be relaxing my mind. Okay, so let's go over NVIDIA, guys, and let's make some sense of some charts. So NVIDIA, it went up today 9.32%, and it closed the trading session at $1,037.99. Let me ask you something. Is any of you guys interested in having 100 shares of NVIDIA? By the way, and I am going to give some credit to myself here. Didn't I tell you guys a month ago or something like that I had some sort of conspiracy theory about a potential stock split of NVIDIA? Do you guys remember about that? I ended up to be right about that, right? That was an accurate call out. So Kitiani Davis, yes, I want it. So that's an issue, guys, because the stock split is going to be effective on June 7th, I think. Yeah, Freely also wants a lot of shares. So I don't know, guys. If we happen to see some sort of meaningful dip in NVIDIA into June 7th, any meaningful dip is going to end up being bought up here, guys. Everyone wants 100 shares of NVIDIA. That is just the way it works. Yeah, of course. And I don't know if you guys know how to read an earnings report. The earnings report that NVIDIA posted yesterday, guys, was once again unbelievable, pristine, record. I don't know what else to say about it. So this is a company which commercial performance is validating the appreciation of the price of the stock. And on top of that, they just announced that they are going to carry out a stock split. And obviously, when it comes to artificial intelligence and stuff like that, this is the company that is, as of now, benefiting the most from this AI mania. So this is like the perfect storm for NVIDIA, right? Okay. In the case of a pullback, guys, I was eyeing today for potential support $1,023. That's a spot that when I saw NVIDIA pulling back into the closing bell, I thought like, okay, so we have a previous resistance from yesterday after hours. This was the first spot at which NVIDIA found some sort of resistance after we saw NVIDIA running like crazy to the upside once a report came out. $1,021. Okay, so that would be a potential spot from which NVIDIA could be bouncing back up, and I think that it actually did it today, guys. Let me see. There you go. Take a look, guys. I am going to draw a line here. So take a look. So NVIDIA failed yesterday after hours at around $1,020. We can round it up. Take a look. $1,020. It went down. Okay. Then it went back up. Fair enough. So what happened today? NVIDIA hit a brand new all-time highs at $1,062. It started to go down, and take a look at the spot at which NVIDIA bounced back up from today. $1,020. So this is the fair potential spot for support in case NVIDIA goes down tomorrow. Say that we open the trading session below $1,020 and, they are pulling the rug out and stuff like that. So the next important spot here is going to be the 5-day moving average, guys. I think, and I could be mistaken, okay, that we are not going to see NVIDIA trading below $960 before the split. I don't think so, guys. So at $960, as of now, we have a convergence between the upward sloping 5-day moving average, so this white line that you guys can see over here, with two previous areas of resistance, and at the same time one previous area at which NVIDIA hit a former all-time highs. We are talking about $970 to be exact here. Say $965, $970. I don't think NVIDIA is going to go lower than this before the split. It can happen. I could be mistaken. And the lower it goes, the better, I guess, for us, because pretty much all of us want to. We all want to have NVIDIA shares. So I don't think NVIDIA is going to go lower than 965. Again, the convergence of the 5-day moving average with a previous all-time highs. Other than that, guys, take a look at this technical chart. Upward sloping 200-day moving average, upward sloping 100 EMA. The same goes for the 20-day. This is a technical chart that is under the total control of buyers. And I think, as I just said, guys, say that we see $970. So from the brand new all-time highs that NVIDIA hit today down to $970, this would be a 10% drop. Given the current circumstances, I think that this is a buy the dip opportunity. Sure. Let me take a look at the market structure of NVDA. Where do I have Let me see. Let me take a look at how the demand and the supply is looking like in the case of NVIDIA. Let's see, NVIDIA Corporation. So remember, guys, this is a market structure chart that I use. What do I see over here, guys? I try to visualize imbalances between the demand and the supply. Demand buyers, supply sellers. So what do we get here? Take a look at the demand, guys. On top of this chart, buyers. The demand is going up, and the supply is starting to go up as well. You guys can see the supply at the bottom of this chart. The supply is starting to go up, but it is a bit below the level of the demand. And as you guys can see, the demand is rising. So this is a very good looking market structure for NVIDIA that suggests that we have higher prices coming up and that any quote-unquote meaningful dip is going to end up being bought up, I think. And by the way, guys, today we had a parade of price targets being increased for NVIDIA. Unbelievable. I counted something like 16. And I think that the average price target, 12 months out, obviously, is at around $1,150. So maybe NVIDIA is heading up there. You never know. Very good looking chart, very solid fundamentals. In the case of NVIDIA, they are about to carry out a stock split. So 965, 970. I think that we're going to have a sea of buyers buying this dip. So do we want to buy when the demand is up and the supply is down? Correct. That's the perfect imbalance between the supply and the demand that you want to see if you want a stock to go up. Absolutely, yeah, sure. I'm not going to take a look at any anchor VWAPs here, guys, because it doesn't make any sense. We don't have any buyer strap here, guys. You guys know that I use anchor VWAPs in order to spot where we could potentially have levels of overhead supply. Take a look at this, guys. Pretty much everyone that ever started a position on NVIDIA is making money as of now. So we don't need to, I mean, we can talk about potential areas of support, but not even, forget about that, guys. So take a look at this anchor VWAP that comes from the former all-time highs of NVIDIA, near $970, $975. So these market participants that started positions on NVIDIA when this stock hit $975 back in mid-March. So the average price of those market participants is $880. We are not seeing $880 in NVIDIA, guys. I mean, at least not in normal market conditions. I don't know what could happen in the future, guys. I mean, I don't know. Maybe China invades Taiwan throughout the weekend. If that happens, that's a whole different story. But again, in normal market conditions, I don't think we have a lot of room to the downside here on NVDA. Hello, Kiko Stocks. So we have more people joining the live stream. Awesome. Nijat. I just got out of work. It's a SPY support and bouncing. I just went over the SPY. You just need to rewind the stream a bit, and you're going to be able to have access to the analysis of the SPY. Okay, Tesla puts. You guys are out already asking about TESI. So let's go ahead and take a look at TESI over here. There you go. AMD, sure. Okay. TESI went down today 3.54%, and it closed the trading session at $173.74. Oh, by the way, guys, I have like 50 people watching the stream. Does everyone know what a stock split is about? I have explained to you guys on multiple occasions what a stock split is about. But if any of you guys doesn't know what is it about, please let me know, and I will explain it to you guys again, okay? Okay, so TESI goes down today, as I just said, 3.54%, and it closed the trading session at $173.74. So, guys, I have been warning you about Tesla on multiple occasions. This is a major downtrend. So Tesla is guilty until proven innocent. What do we see over here? On a 4-hour chart, we have a downward sloping 200-day moving average, downward sloping 100 DMA. And remember, the slope of the moving averages is super important. When you guys see any moving average downward sloping and the price of that stock below that downward sloping moving average, that implies that downward sloping moving average is putting downwards pressure because of its position, because it is downward sloping. So take a look at this blue line that you guys can see over here. This is none other than the 100-day moving average. Take a look. Do you guys think that this is a coincidence? Take a look at the price or at the level that Tesla felt at back on April 29th, when everyone was calling out a bottom on Tesla because, you know, bro, the robotaxis, bro, and the full self-driving, bro, and you don't understand Tesla, bro, and Tesla to the moon, bro. Elon is a genius, bro. Take a look. Take a look at this blue line, guys. This is the 100-day moving average. Tesla failed right at this 100 DMA. So it retraced, it went down, found support at around $168. Then buyers once again stepped in, and take a look at the level at which Tesla felt at on May 21st, 2 days ago. Once again, this 100-day moving average. Do you guys think that this is a coincidence? So take a look at how the slope of this moving average determined that Tesla was going to go down once a test of this moving average was carried out. And that's exactly what happened, guys. So this moving average has turned into a nightmare for the bulls of Tesla. So if we want to see some sort of acceptable rally in the case of Tesla, Tesla needs to burst above $186, which is the price that the 100 DMA is signaling as of now. So that's let's say that's the most important fact that you guys need to keep in mind in the case of Tesla. The chart doesn't look good at all, guys. So take a look at how the bulls weren't able to hold today as support the convergence of the 20-day moving average or 20-period moving average, this pink line that you guys can see over here, and the 5-day moving average. So we can see over here these two moving averages coinciding, and as of now, we can make a case that if Tesla can burst above $178, so if the bulls of Tesla can recapture and consolidate above these two moving averages, so above $178, then we could see, or we can take a trade here from $178 up to the 100-day moving average that as of now is signaling something like 100. Yeah, we can say it is signaling $185. So say from $178 up to $185, this could represent a 3% profit trade. But Tesla is a no-touch below the convergence of the 5-day moving average and the 20-day moving average. So a no-touch from a, let's say, long standpoint below 178-ish. So someone of you is asking about puts. What about making a test of the 20-day moving average? An unsuccessful test at $177. Maybe this could be an opportunity in order to get puts, because this stock is under the total control of sellers. So if you guys see Tesla tomorrow going up and failing at $177, this could be an opportunity in order to get some puts of Tesla. Not a good looking chart, guys. So a no touch from a long standpoint below 178, and maybe a short trying to burst above in an unsuccessful way $177, and maybe a long opportunity, guys, consolidating or potentially consolidating above $178. Let me pull up here the market structure of TESI. Let's see, what do we have here? TSLA, let's see. And by the way, guys, you know how this works. You know that I live stream throughout the whole trading session for the people of my Patreon. It is in Spanish, so you don't need to sign up for my Patreon. And I am not making a sales pitch either over here, guys, obviously. But when I go live for you guys, you know, I have been streaming for something like 7 hours, you know, in a row before. So when I go live for you guys, I am super tired. So if you notice any mistakes here and there, I obviously do apologize for that. Okay, the market structure. So demand on top, and at the bottom, you guys can see the supply. The demand is starting to rise, which is interesting, and the supply is starting to go down. So this is an interesting market structure chart for Tesla. It makes me believe, since the demand is rising and the supply is starting to go down, not a lot, but a bit, that if maybe the bulls of TESI can recapture 178, as I just said, and they can consolidate above 178, maybe we can see some sort of further push to the upside, and maybe, why not, a test of the 100 of the downward sloping. That is something that is worth to be point out. Maybe a test of the downward sloping 100 EMA near $185. There you go. And take a look, guys. If we take a look at Anchor VWAPs over here, this is a disaster. What a disaster, guys. Take a look. Let me pull up some Anchor VWAPs here while I take a sip of, what is this? Sprite. Okay. Take a look at this, guys. Take a look at this. So we can see over here an Anchor VWAP that comes from the last year's high of TESI at around $300. So these market participants, guys, so try to wrap your head around this situation. We have people that started positions on Tesla when this stock hit $300 last year. So the average price of those market participants is $218. They are losing a lot of money over here. Take a look at this other Anchor VWAP that comes from the low of TESI of 2023, last year's low. So these market participants have an average price on their positions on Tesla of $205. Again, and this is something that I always tell you guys, when I go over Tesla for you. What do you guys think that these market participants are going to do whenever Tesla, if that ever happens, hits these two levels? What do you guys think these people are going to do? They are going to sell out of these positions, guys. They are losing a lot of money. No one likes having an unrealized loss on any given position. So, what is the model of the study here, guys? That any meaningful and potential process of recovery of Tesla, if, I don't know, Tesla, if Elon happens to turn this story around, is going to be a painful one, because we have a lot of buyers trapped all over the place. A lot of buyers trapped all over the place. So keep that in mind, guys. It is a downtrend, not a good looking short, and we'll see what happens with Tesla, guys. We'll see. Yeah. Okay. They will cash out on Tesla. Absolutely. 1,000,000%. AMD, Advanced Micro Devices. Guys, I told you last Thursday, in the case of AMD, to keep an eye on, again, the 100-day moving average. 100-period moving average. Take a look at this blue line. This moving average has turned into an absolute nightmare for the AMD bulls. Take a look at this, guys. AMD has failed right at this 100-day moving average on 1, 2, 3, 4, and 5 occasions during the last 6 trading sessions. Do you guys think that this is a coincidence? There are no accidents nor coincidences. We have a problem in the case of AMD with the 100-day moving average. And on top of that, I am going to pull up here some anchor VWAPs. Take a look. AMD. Let's see. Take a look at this. Take a look at the convergence of these two anchor VWAPs. So the one that I am pointing out with my mouse comes from the all-time highs of AMD, which was hit, this was back in early March, near $226. And take a look at this other anchor VWAP, the blue one that I am pointing out with my mouse. So this is an anchor VWAP, anchor volume weighted average price line, that comes from the first trading session of this year. So these two anchor VWAPs are pretty much coinciding at $170. What does this imply? That we have a lot of buyers trapped at $170. If on top of that, we can say that the 100-day moving average is signaling as of now $169, what is the conclusion that we have here, guys? That AMD needs to burst above $173. We can say $172. We need to see AMD closing at least 2 trading sessions above $172 for AMD in order to be able to, let's say, have an acceptable rally. So this stock is 1,000,000% guilty below $172. Does that imply that we cannot take any trade to the upside below 172? Not necessarily. But say that you start a position on AMD tomorrow, guys. Let me zoom out here. So let me zoom out here. Let me draw a line here. Take a look. We have the 5-day moving average as of now signaling $164. Say that you guys see AMD tomorrow consolidating above the 5-day moving average. Nice. That is good. And on top of that, NVIDIA is holding, and the SPY isn't falling off a cliff, and SMH is having some sort of green day and stuff like that. Okay. Say that you see AMD consolidating above $164. Fair enough. Maybe we can start the position on AMD, guys. But the spot, the level at which you are going to have to take profits is going to be around 168, 169. And if you want, and if any of you wants to get AMD puts, keep an eye at 169, guys, 170. This is a critical, but 1,000,000% critical level for AMD. So, yeah, maybe a process of consolidation above 164. Not bullish, but this could be signaling that the door could be opening for a trade to the upside, at least a small one. And why not maybe a test of the 20-day moving average, $156. From this moving average, AMD could be potentially bouncing back up. But if you ask my personal opinion, guys, I am not touching AMD from a long perspective below 172. Above 172, I think that I would be interested in grabbing some AMD calls over here. So let's take a look at the market structure of advanced micro devices to see what do we see here. AMD, demand and supply. Take a look. The market structure looks good, guys. The demand is clearly rising. The supply is also rising. I would say that we have a tie here. We have a tie between buyers and sellers. And since I don't see any advantage from a buyer's or seller's standpoint, from a market structure standpoint, I would have to see AMD consolidating above 172 in order to go down this stock. Good info. I played the morning trend up. Nice. Then open a put and wrote it down. Awesome, bro. Awesome. Very good job. Made money. Awesome. Awesome. Very, very good job. Okay, guys. Any other stock? SMCI. Sure. I traded SMCI today, guys. I ended up making money there with a super microcomputer. Okay. Here is SMCI. Take a look at this, guys. So this is a 4-hour chart of super microcomputer. Take a look at this resistance, $970. This is a very well-defined level of resistance for Supermicro. So the bulls failed today right at $970. Check this out. $970 is a previous resistance back from May 16th. And if I pull up some anchor VWAPs in the case of Supermicro, SMCI, take a look at this, guys. Take a look at this anchor VWAP. Okay, this one, the one that I am pointing out with my mouse. This is an AVWAP, or an anchor volume weighted average price line that comes from the all-time highs of super microcomputer. And this anchor VWAP is signaling as of now let's round it up, $930. Take a look at how this anchor VWAP failed, take a look at how the bulls of super microcomputer couldn't burst above this anchor VWAP. This was back on April 18th. And take a look at how the bulls have been struggling at consolidating above this anchor VWAP, $920-ish. So, what's the deal here in the case of SMCI, guys? We have a very well-defined area of overhead resistance at which SMCI has failed on 2 occasions recently. And on top of that, we know that we have a bunch of buyers. I'm not going to say trapped, but we have a lot of opened positions on SMCI, losing positions as of now near $920. So what's the message that I want to get across here, guys? If you guys happen to see SMCI consolidating above $920, that could be signaling that the bulls are gathering momentum in order to fill this gap up to $970. Once again, say from $920-ish up to $970, we are looking at a 5% potential profit in the case of super microcomputer. Okay, let me zoom in here a bit more and take a look at the spot at which the bulls found support today at, guys. This pink line, this is the 20-day moving average, $840. This is an important spot. If you guys happen to see SMCI trading below $840 tomorrow, keep an eye on the upward sloping 100-day moving average. I am going to zoom out here. Take a look at this blue line. It is upward sloping. What does that imply, guys? That since we are talking about a moving average that is upward sloping, if it happens to be tested as potential support, it is very likely to act as such. And why? Well, because it is pushing price up, because it is upward sloping, you see? And take a look at how this 100-day moving average has acted as support. We can say it acted as support back on May 1st. And take a look at how on 2 occasions SMCI was collapsing and the bulls were about to make a test of this upward sloping 100-day moving average. And this moving average, and despite the fact that we didn't see a technical test of this moving average, it ended up being able to push price up. Take a look. We were like inches away from seeing a test of this upward sloping 100-day moving average. This was back on April 22nd. Then SMCI went up. It went down again. We had a successful test of the 100-day moving average. It acted as support once again on May 1st near $695. SMCI went up once again, went down again, and we can make a case that the 100-day moving average, and despite the fact that we didn't see a second test of this moving average, it ended up pushing price up. So if this 20-day moving average happens to be broken to the downside near $840, keep an eye on $786. I am giving you a bunch of levels over here, obviously, right? I guess that you guys are taking note of this information. So from 920 up to 970, we could have a potential trade to the upside. Keep an eye on SMCI also holding a support $840. And if $840 happens to be broken to the downside, keep an eye on the upward sloping 100-day moving average near $782. Well, that was a lot of information, guys. Okay, let's take a look at the market structure of SMCI. What do we have here? Let's see, demand and supply. Let's see. Excuse me, guys. There you go. Take a look, guys. The demand is through the roof. Remember, on top of this chart, you guys can see the demand. At the bottom, the supply. The demand is through the roof. The supply is rising, or we can say that the supply is starting to rise, but the level of the demand is way above the level of the supply, guys. So the market structure of SMCI looks bullish. Therefore, in normal market conditions, I think that we have higher prices coming up for SMCI. And if this 20-day moving average is broken to the downside, I think that the 100-day moving average could be very well acting as support. In the case of Supermicro. Kev, I already went over AMD. Yeah, so you just need to rewind a bit the stream, and you are going to be able to see the analysis of AMD. Okay, guys, any other request? Let me see. We are 47 minutes in. I still need to pack my suitcase in order to go to New York City. Yeah. And I need to wake up very early tomorrow, by the way. So if you want me to go over any other stock, please let me know. Palo Alto Networks. Sure. Let's go over PA&W. PA&W. I traded PA&W yesterday with one call option. So PA&W goes up today 0.93%, and it closed the trading session at $311.44. So a very choppy chart, guys. If I zoom in here, we can make a bearish case because the bulls haven't been able to consolidate above this white line that you guys can see over here, which is the 5-day moving average. So any process of consolidation, and by the way, guys, and you know, you have watched a bunch of my streams. The 5-day moving average is one of the most important moving averages that I use because it helps me to tell who is in charge of minor time frames. Okay, buyers or sellers. So the fact that Palo Alto closed the trading session today below the 5-day moving average, so below $315, tells me that in minor time frames, I have sellers kind of controlling the tape. So ideally, in order to go long Palo Alto, I would like to see a process of consolidation above $315. If that were the case, say that we start a position on Palo Alto above $315. From $315 up to the next important gap that Palo Alto could be potentially filling. We are talking about $326. This is a previous resistance back from February 27th. We are talking about a potential profit of 4%. Nothing to sneeze at, guys. So this would be ideally the trade that I would be interested in the case of Palo Alto Networks. If I zoom in a bit more, guys, we can see the 20-day moving average upward sloping, and the bulls were able to find support today right at this blue line the 100-day moving average, the 100 DMA. So this is positive. Okay, the fact that the bulls were able to defend in a successful way an important moving average. So this could be signaling that the bulls are about to finally burst above the 5-day moving average and maybe consolidate above that level, and that could attract more buyers to Palo Alto. So this would be my trade. Yep. Let me take a look at some VWAPs over here, anchor VWAPs. In the case of PANW, what do we see over here? Let's see, Palo Alto Networks. Yeah, take a look, guys. So despite the fact that Palo Alto is trading, let me see. So Palo Alto is trading as of now, guys, 20% of the highs. 20% of its most recent all-time highs. So despite the fact that, this stock is trading 20% of the highs, we don't have a lot of buyers trapped in higher levels relative to the current price of Palo Alto, guys. Take a look at this anchor VWAP that comes precisely from the most recent all-time highs of Palo Alto Networks, which was hit back on February 9th. So these market participants have an average price of $293. They are making money. Maybe this is the average price of Nancy Pelosi, guys. Who knows? Yeah. Maybe Nancy Pelosi has an average price on Palo Alto Networks of $293, right? She is such a good trader. So, what's the moral of the story here, guys? That we don't have a lot of buyers trapped in higher levels relative to the current price of the stock. So, once Palo Alto has burst above the 5-day moving average, $315, I think that the path is widely open for buyers to step in and potentially being able to bring Palo Alto Networks to higher prices, guys. This would be very bullish behavior in the case of Palo Alto. As I just said, guys, a potential process of consolidation about $315-ish. Let me take a look at the market structure of PANW. What do we see over here? Let's see, Palo Alto. Let's see. Take a look at the market structure, guys. Remember, on top of this chart, you guys can see the demand. At the bottom, the supply. Demand buyers, supply sellers. The demand is through the roof, and the supply is going down. I think this stock, taking a look at the market structure, the anchor VWAPs that I just showed you guys, this stock is a buy above $315 approximately, with both hands in normal market conditions. Yolanda Adams, triple Q. Sure. What happened today in the case of the Qs? Let's see. This is pretty much the same situation of the SPY, guys. If I zoom out, the trend is your friend. The trend is up. All the moving averages are upward sloping. Nothing wrong with the Qs. We can make a case that the bears made a little progress over here today by breaking to the downside the 5-day moving average near $554, which is a previous all-time highs and therefore a previous level of resistance. So if the Qs open the trading session tomorrow above 454, guys, that's bullish. Today's trading session, guys, could have been a bear trap. How many bear traps have we seen throughout this year, guys? I lost count of it. How many bear traps, guys? How many times we have seen the SPY going down and the Qs going down and the bears, saying, oh, there you go, we have a correction coming because the Fed this and the Fed that and Powell and the interest rate cuts, whatever. How many times, for real? And every single drop that we have seen this year has been nothing but a buy the dip opportunity. Why? Because the trend is up. In uptrends, dips tend to get bought up. That's what happens, whether the bears like it or not. And you see the bears, guys. Oh my God! So they start with the Bollinger Bands and the MACD, and we have a bearish crossover on the MACD, and the RSI is very elevated, and the Qs are overextended, and the SPY has gone up too much, and the RSI on the daily is at 1,000. Bullshit. And we have, we have a potential head and shoulders here. The whole thing is a hoax. It's bullshit. What you guys need to see is the trend, guys. And if you want to short the markets, guys, you need to look for a clear sign or signal of a trend change. Do you guys see, in the case of the Qs, a clear sign or signal of a trend change? No. So in the case of the Qs, if the bulls open the trading session tomorrow above 454, maybe they could gather momentum in order to fill the gap once again up to the brand new all-time highs of the Qs, 460. There's nothing wrong with this chart. Opening the session below 454 could maybe attract, which is also, as I just told you guys, a previous all-time highs. This could attract some more sellers, in which case, keep an eye on 450, guys. This is a previous all-time highs, and this is a previous resistance at which the Qs felt on 2 occasions, and more precisely back on March 21st and also back on March 8th. Yeah, the Qs could be bouncing back up from this spot. If 450 is broken to the downside, then we're starting to talk, because in that case, the 5-day moving average, and if the Qs and if the bears are able to close 2 trading sessions below the 5-day moving average, then the 5-day moving average is going to start to downward slope, which could be hopeful for the bears. But as of now, guys, there's absolutely nothing wrong with the technical chart of the Qs. Sound. Let's go over Sound. Oh, so if the overall trend is up, then doing puts is a bear trap. Guys, again, and I have told you guys this information on multiple occasions. Don't try to guess tops and don't try to guess bottoms. So take for example this, guys, Lululemon. How many people are calling out a bottom on Lululemon? Take a look at this technical chart, guys. I have seen many market participants saying, okay, this is the time to buy Lululemon because this sell-off is overdone. And I'm going to ask you something. Is this technical chart showing us a clear sign or signal of a trend change? Take a look at this. Below all the moving averages. Downward sloping 5-day moving average. Downward sloping 20-day. Below the 200. Below the 100-day moving average. Take a look at this. And over here, we have a lot of people, guys, trying to catch a bottom. And you know what? If you try to catch either bottoms or tops, you're going to be wrong 9 out of 10 times. Mark my words, guys. So what do we do in this case? Say that you see value on Lululemon and you like, I don't know, Lululemon clothes and stuff like that. So wait for buyers to show some strength. Absolutely, 100%. The trend is our friend. Absolutely. So what could be a sign of strength here in the case of Lululemon? A potential recapture of the 5-day and the 20-day moving average. That could be signaling that buyers are starting to show above over here. So you don't need to be a hero here, guys. You see, this stock is guilty until proven innocent. And the same goes for Nvidia. I just went over Nvidia, but this is a good example. Many people see this chart. No. No, no, no. Oh, no, 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 no. This stock is overextended, and Nvidia has gone up this year 1,000,000%, and the RSI is elevated, and we have. I mean, I don't use the MACD, and we have a bearish crossover, and Nvidia is trading above the upper Bollinger Bands. Bullshit. Bullshit. All that is bullshit. If I wanted to short Nvidia, I would like to see at least the 5-day moving average being broken to the downside on higher than usual volume. Just to put some examples on the table. Okay, so what was I talking about, guys? I forgot. SoundHound. Okay, SoundHound, an AI-related stock. So SoundHound went down today 1.58%, and it closed the trading session at $5, pretty much. I mean, the technical chart doesn't say much, but we can make a case that SoundHound is trading above the 200, the 100, the 20, and almost the 5-day moving average. I just told you guys that I use the 5-day moving average a lot. So in order to go long SoundHound, guys, I would like to see it consolidating above a previous resistance at which SoundHound has failed multiple occasions recently. So above $5.50, and therefore I would like to see this stock trading above the 5-day moving average. So I think that above $5.50, I could be thinking about going long over here. But I mean, yeah, this would be the ideal scenario in order to go long SoundHound here. And I don't like trading stocks below that are located below the 5-day moving average. So I would wait for SoundHound to be above $5.50 ish, let's say, in order to go long. Let me take a look at the market structure of SoundHound if I happen to have it available. Let's see, SoundHound group. What do we have here? Take a look, guys. The demand is flat, not going down, not going up, but the supply is going down. So this is a positive imbalance that we can visualize over here in favor of the buyers, in favor of the bulls. So give me SoundHound above $5.50, and I would think about it. And Anchor VWAPs. Let's see. Anchor VWAPs of SoundHound. Let's see, what do we have here? SoundHound. I don't have any, by the way. Let me display an Anchor VWAP from the all-time highs. Take a look, guys. So the people that started positions on SoundHound when this stock hit $10, they shouldn't have done that, but they did it. It is what it is. So they have an average price as of now of $6. So I can use this Anchor VWAP in order to take profits. So say that I start a position on SoundHound at $5.50. I already know, thanks to the Anchor VWAP that I just displayed, that I have buyers trapped at around $6. So from $5.50 up to $6, what about an 8% profit trade? That would be my price target in order to close the trade. There you go. Think that we are, let's see. Ooh, we are already 1 hour in, guys. So, is Apple okay for calls right now? Let's take a look at Apple. AAPL. Wow, what a reversal today, guys. Jesus Christ. Apple got killed today, huh? Very nasty trading, trading action or price action for Apple today. So I'm gonna say the same thing, guys. So the 5-day moving average was broken to the downside, and Apple is holding as of now this previous resistance. Take a look at 187 bucks. And we can also make a case, guys, that this is an area from which Apple broke out from back on May 14th. So this is a potential spot. This is a potential level of support for Apple, guys. So keep an eye on Apple consolidating above 187 bucks, previous resistance, as I just said, back from May 3rd. Say that we start the position on Apple from 187 up to the 5-day moving average, $190. This could represent a 1.50% profit trade, and up to $193, the most previous area of resistance for Apple, we are looking at a 3% profit trade. So I would go long Apple. I would be a buyer of call options holding 187 as support, and say that tomorrow we open the trading session and you guys see Apple trying to consolidate above 187. If 187 happens to be broken to the downside, watch out for puts here, guys, because if that were the case, we have a potential gap to the downside, down to the upward sloping 20-day moving average near $183 rather. Okay. All right, let's take a look at the market structure of Apple. AAPL. Let's see. Come on, market structure. Give me the fucking chart. Come on. Apple. There you go. Let's see. Demand and supply. The demand is flat and stable, we can say. The supply is rising, but it is below the level of the demand, and it is below average. When I say average, in the case of the supply, guys, I am talking about this dotted line that I am pointing out with my mouse. So this is a market structure that benefits the buyers. So Apple holds 187, guys. It can keep going higher, in my humble opinion. Anchor VWAPs of Apple. Let's see. AAPL. Apple. Good, guys. Take a look. We don't have any buyers. I mean, we cannot make a case that we have a lot of bag holders all over the place here. Take a look. This is an anchor VWAP that comes from the most recent all-time highs of Apple. These guys have an average price of 180. Good, guys. Yeah, 187 is held. Apple can go higher, in my opinion. Yeah, Apple had a nasty day, guys. Yeah, it really did. Apple had a nasty day, for sure. Okay, guys, I am going to wrap it up. I don't want the stream to be too long. If you can do me a favor, go to my YouTube channel. You guys know that I do these live streams exclusively for you guys. But once I'm done streaming for you, I release the stream on my YouTube channel for everyone. And the comments that you guys drop over here doesn't make it to the final video. Let's put it that way. So if you can go to my YouTube channel, drop a comment, whatever you want to say, that will be very much appreciated. Keep in mind that I am not going to be on Discord tomorrow. I have to take a trip to New York City, and I will be back on Monday. Okay, so let's see if the markets keep dropping a bit more. That would be even healthier. Let's just put it that way. Gracias, Alvaros. You're already dedicated. Thank you, guys. Today I was very active on Discord, guys, because we had, the tape was moving. So I am not very active when the markets aren't doing anything. But you guys know, guys, that whenever we see volatility, I am going to be very active on Discord, calling balls and strikes. So thank you very much, guys. God bless you all, okay? You guys have a fantastic weekend and Memorial Day holiday. And I will see you guys on Discord, okay? Thank you very much. Enjoy, guys. Take care. Thank you. Have a pretzel. I will. Absolutely. Take care, guys. Thanks.